Hi, this is Greg. I'm coming to you from actually vacation. It's the last week of August 2020, and I didn't want a whole week to go by without uploading anything, so here I am. Just rough cut on the cell phone. So, the genesis of this video was I was watching CNBC this morning, and they were discussing Apple, what Apple has done over the last 4 months, and I thought it was a dramatic example of what I've been talking about on some of these videos that I put out, specifically the Buffett indicator that's flashing a sell signal, which was the previous video that I did, and so I thought I would use this specific situation as a dramatic example of what I'm talking about. Okay? So, if you've been paying attention, and if you've been watching my previous videos, you'll know that I have been talking about the massive overvaluation of the stock market due to excessive money printing and unbelievably accommodative Fed policy. Now, this Fed policy is completely without precedent, and I wanted to give some sort of historical context so that those of you that are watching this that may not be old enough to have lived through the dot-com bubble and other things like that, you can kind of understand like where we are and how it relates to what's happened in the past, okay? So I was watching CNBC, and the commentators are talking about Apple, and they're all money managers, so they all have probably Apple in their portfolios and in the portfolios of their clients. And one guy mentioned a startling, unbelievably mind-blowing statistic, and that is that Apple has grown more in market cap over the last 2 months than the entire market cap value when Steve Jobs died. Okay, so just think about that. It's gained more in the last 2 months than the entire value of its market cap when Steve Jobs died. Okay, so this can only happen in an environment where the government and the Fed are in cahoots, basically, to try to make things seem better than they actually are, not only in the stock market, but in the economy in general. Okay, and I've talked about this on multiple videos in the past. Stock market trouble ahead, for example, which I'll put a link to that at the end of this video, and also the Buffett indicator is flashing a sell signal. I'll put that one also so you can look at it more. But here's a couple of unbelievable statistics, okay? Since the March low of March 23rd, right, the peak of the Corona scare, the stock has basically doubled, okay? It went from 250 now to, on a split adjusted basis, 250 to 500. Okay. Since July, just since July, right? And now we're at the end of August, so this is a 2-month period. It basically has increased 42%. Okay, 42%. And it's interesting, if you go back historically and you look at, like, for example, 2017 to 2019, for example, the beginning of those 2 years, the stock went up maybe 20% over a 2-year period. Okay, so now it's going up 42% in a 2-month period. Now, what causes this? Okay, it's important for everyone who's watching this video to understand this is not normal behavior, and there's only one explanation for it. And that explanation is that the government, i.e. the Fed, and the fiscal policies of the US government are pumping so much money into the system, trillions and trillions and trillions of dollars. The Fed has printed $2 to $3 trillion since March, and the government put in $2 trillion with the CARE system. The president came out with an executive order that's multiple hundreds of billions, and then they're going to come out with another probably $1 trillion once they come back from vacation. You have to understand, this has created the biggest asset bubble in the history of the world. And it's not just the United States doing it. It's Great Britain, it's the EU, it's Japan, everybody. Everybody has jumped on the bandwagon of money printing and indiscriminate securities purchases, which cause an enormous amount of money to flow into the system and creates these asset bubbles. This is not normal behavior. You should not think this is normal, and you should be very frightened over what's going to happen in the next, 6 months to a year. Nobody can predict it. I can't predict it. Now, just a little historical perspective. Back in the late 90s, Alan Greenspan was Fed chairman, and he was roundly criticized post the dot-com bubble for keeping, and he wasn't even really buying securities necessarily. I mean, they might have been, I don't know, I don't have privy to all that information. But he was widely criticized for keeping interest rates at 1%. It wasn't at 0, it was 1%. So he kept interest rates too low for too long, and it helped precipitate the dot-com bubble, which ended in a market crash and a complete readjustment. Now that was kindergarten baby stuff compared to what Jerome Powell is doing. Baby stuff. Baby steps. What Powell is doing is, I can say it's irresponsible. I understand why they're doing it. Trump wants to get reelected, and every administration does this. Obama was equally guilty of it. So everyone does it. So it's not like, Trump is evil. Trump is doing something unusual. Every administration tries to get elected by putting pressure on the Fed to keep rates low, make everything look better than it actually is. But it has never been accompanied by such unbelievable fiscal stimulus, right? So this is multiple trillions coming in from the fiscal side and the monetary side, blowing up the money supply. And the money's got to go somewhere. And Apple is currently, one of the many darlings of the market right now that everybody's piling into, thinking it's going to go up another 42% in the next 2 months. Now, what I said in the last video, where I used the Buffett indicator as validation of my theory, or my belief, I should say, that the market is massively overvalued, is that you can do this for a period of time. Nobody knows how long it's going to last, okay? It could go on for 6 more months. As long as they keep pumping money into the system from both sides, this could go on for a very long time. However, at some point, something is going to happen. Either an economic event, another external event like Corona, an international event, like I've been warning people about a resurgence of a European debt crisis event, which is just a matter of time. And I'm going to be coming out with a follow-on to the next Black Swan event that nobody's talking about. Is another video I did where I talked about the rising risks of the EU's, profligate, irresponsible policies with respect to money printing and basically bailing out the Southern European states or countries, whatever you want to call them. Eventually, this ends. This is a cycle. Eventually, it ends. Eventually, there's a revaluation to the market. The bubble breaks. The incredible bubble pops. And things come back down to earth, and then we go through a period of consolidation, which will ultimately happen. Now, I can't predict when it's going to happen. Can't predict how long this is going to go on. A lot of people are going to get rich in the process. And they talk about income inequality these types of policies create more income inequality than anything else you could possibly imagine. And Obama was a big proponent of this. And this is where the chasm between rich and poor is defined. Because those that own assets, those that own real estate, those that own stocks, are the ones that become even more wealthy during periods like this. But this is the world we live in. It's not going to change. And people have a tendency to take the easy way out. And the easy way out is to print money and inflate the markets. That's the easy way out. Okay? So in conclusion, be cautious. Be cautious. You might want to trim some of your really extended stocks at this point in time. I'm not giving financial advice, but you should strongly consider that. Now, what I'd really love you to do, if you could please just pay attention for 1 second, please, right after this, there's going to be a screen with 2 different videos that I did. And they are follow-ons to what I'm talking about here. And I think they would be very good for you to listen to. One is the one about the Buffett indicator flashing a sell signal, where I have lots of charts and a lot of great information. And then the other one is Stock Market Trouble Ahead, which goes into a lot of detail on all of these points. Okay, so that's all I have to say. I'm going to go back, maybe go down to the beach, maybe get out the surfboard, maybe a frisbee, play a little beach blanket bingo, something of that nature. And so I'll be coming to you very shortly with some more content very soon. Thank you for watching.